today we're going to be talking about all the turmoil going on in the global banking system. Are we headed for a global banking collapse? So let's waste no time. Let's get right into the content today. But before we do, if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. Now, the banking industry has not been this unstable since the global financial crisis of '08. And if we're being honest, at least for me personally, this kind of came as a shock. Before this, everything pretty much seemed to be fine. For a lot of major banks, you release quarterly statements of everything that you have going on. These are public companies. You see the balance sheets, and this kind of came as a shock. It all started with Silicon Valley Bank, the FDIC just coming in and seizing them. And shortly after, a similar thing happening, from the West Coast now onto the East Coast with Signature Bank as well. And these two major U.S. banks, this was the second and third largest bank in the U.S. to ever fail as far as failures that have happened in U.S. banking history, and shock to the market. But then you hear this story about Credit Suisse. Now, and with all due respect to Silicon Valley Bank and Signature Bank, which, have had respectable businesses, Credit Suisse is a global investment bank. This is this is one of those almost too big to fail type of banks. It's a major player. If you're anybody in banking, if you know anything about banking, at some point you have heard about Credit Suisse. So to the point where, and they get sold off to a direct competitor as well for $3 billion. Now, I don't know, all the assets. I didn't go into everything that they own, but $3 billion for a bank that, had about $500 billion or $500 billion in assets, global clients everywhere. Now, I know they were bleeding money. They were losing clients. People were pulling out. They had all type of issues, and that's why this had to happen. But to be sold for $3 billion and such a large, important bank for this to happen to, and the way the markets reacted to it, they kind of seen it as a good thing. It gave some credibility to the bank that bought them. It's going to make them stronger. It's a Swiss bank. It creates some stability, but at the same time, for such a large global institution to fall, it doesn't rest easy on me. It's something that, if it's Credit Suisse, it's happening in the U.S., it's happening in Europe, is it going to continue to happen? What about all of these other mid-sized banks? And remember, mid-sized banks are a lot bigger now than they were, let's say, 10 years ago. And, is the government just going to continue to step in? These are publicly traded companies. If the government's just going to continue to step in and help everything, is that really capitalism? And, while, the deposits have pretty much been safe, the bonds, especially for Credit Suisse, a whole bunch of losses for bondholders, gonna mess with the bond market quite a bit. So, even though the government is stepping in and trying to stabilize things, I think we got a big storm down the line, a lot of turmoil, and I don't think that this is the end of it, and I can see it potentially getting a lot worse than this. Now, First Republic Bank is the latest troubled U.S. bank. So troubled to the point where banks like Chase and the Bank of America had to infuse about $30 billion into the company. So they basically gave $30 billion between a couple various banks, about $5 million apiece, for deposits into this bank to make sure that, it doesn't collapse. The reason why they did so is because they didn't want to see a third bank fall in such a short period of time, making consumer confidence even lower than it already was, and starting a domino effect of just bank runs and for things to just fall. But what if the $30 billion was not enough? Because since then, the stock has been downgraded, the bonds have been downgraded, the stock price is just continuing to fall. Now, obviously the money that they got on hand will help them from, having the FDIC just come in and seize them. But what if it's not enough? What if, regardless of this, all it did was just buy it some time and it still ends up collapsing anyway? And I want to also raise the question, who are these people that are pulling these funds? If $40-50 billion is leaving the bank at a time, this money isn't going under some mattress. where is this money going? I'd like to raise the question, are these potentially Chinese firms that are pulling out of the U.S. markets, taking their money out of the United States and putting it elsewhere? Now, I have no source, no nothing that I could confirm that, but if so much money is leaving these banks to the tune of billions and billions of dollars, which banks are receiving billions and billions of dollars in deposits, or where is the actual money going? Who are the people that are pulling the funds? It's, all legitimate questions. I don't necessarily have the answers, but these are things that all of us have to consider as this unfolds, and hopefully within time, we will get those answers. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.